You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com and, of course, from the Options Insider Radio Network. Hope you guys have enjoyed the slew of content hitting you this week. Great pro Q&A. We had a great live huddle with Mr. Overby. Don't get those too often on Wednesday, and a whole bunch of other fun stuff, including options oddities coming up a little bit later today. Where do you get all that stuff? If you want the live throughout the week, if you want the pro Q&As, as well as options oddities, theoptionsinsider.com/pro. Of course, our podcasts are available on demand on just about every platform on the planet, and there are literally more every day. It's hard to keep track of how many platforms there are and ways for you guys to consume the on-demand content, including over there on YouTube. A lot of you like it over there as well. Wherever you listen to it on demand, keep rating and reviewing. It does help. And, of course, keep those questions coming. We do have to hear from all of you guys and gals out there. And let's see who we're hearing from on the old program today. We are joined by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program. How go things in the volatility mecca known as Texas, sir?
Oh, it's beautiful here. Sunny, weather's great. What else could you ask for? It's good to be alive.
Oh, so exactly like Chicago, you're saying then?
Exactly like Chicago, except not cold and rainy and gross.
I don't know about the gross part, but I'll give you the colder and rainier than Texas as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down the week that was and indeed still is. From a vol trading and trending and unusual activity and all sorts of fun and indeed sometimes weird perspectives, because these are weird times in the world of volatility. And coming into showtime after yet another topsy-turvy week where the markets were kind of figuring out where the heck they wanted to go and what they wanted to be this week, we did see finally all that consternation over the debt ceiling seemingly punted down the road to December with that interim deal we have down there in DC to keep the government going through December from a funding perspective. So that took a lot of the juice out of the market from a vol perspective. Also saw us back on the rally mode. Coming into the end of the week now, markets were unched to slightly higher on the day. Now they are trending back into the red ever so slightly. The Dow is pretty much unched on the day. That makes it the laggard of the day. S&P off a little over 0.1%. And the NASDAQ off about 0.33%. So we were seeing vol coming in since last week. Obviously, we have seen vol coming quite a bit, but it seems like maybe with a little bit of this downtrend, maybe we'll see some of the erosion start to slow down a little bit out there. Coming into showtime, we have spikes at about a 19, pretty much exactly. That puts it down pretty much exactly 3 points from where it was this time last week. VIX cash coming into showtime was right around an 18.5. That puts it down again, pretty much about 3 points from where it was this time last week. And VVIX, after rallying all the way up to about the 120 level, which used to be the pandemic floor for the volatility of volatility, now back down to about a 107.5. It puts it down over 8, about 8.5 handles from where it was this time last week. So Mark, vol cometh, vol goeth, and a lot of back and forth down there in DC weighing on the markets these days. What's been lighting up your tape in another interesting week in the world of volatility, sir?
Well, they certainly took volatility down from the highs. We're back below 20, back below 19. VVIX coming off the highs. And I know we're going to get into the futures curve, but I think the interesting piece is that unlike some of the expirations we've seen in the past, the VIX futures have been pretty much tracking the VIX index itself. They're still only trading at about a 1 point premium. Makes me wonder whether we're heading for some sort of weird change in trend where, we've seen a lot of softness the first, the last 2 weeks, 2.5 weeks. Could next week, instead of being a sell-off, turn into some sort of weird rally based on positioning? And has me kind of wondering about that. Seen a lot of activity in VIX puts, and then I see a market where, everything is down. You got vol down, you got the market down. It's a malaise Friday, you might say.
It is a malaise Friday here to end the week, but it hasn't been a malaise week. A lot of news coming out of the vol space this week. So before we dive into the VIX futures curve and everything else, Mr. Meatball, the day we have been talking about and anticipating for quite some time is finally nigh, sir. How long? Pretty much since February of 2018. So long past 3 years now, we have been waiting for some sort of return of the much heralded, also very contentious XIV. Of course, the product that blew up there in the height of the Volmageddon out there. Many say it was the catalyst. It was the match that caused that whole conflagration over there. Of course, it's been a very contentious since. A lot of people have weighed in on both sides of this issue, whether the SEC should even allow these types of products, inverse and leverage and all these other things. There are very, very sane heads and wise folks in the space who think these things should never see the light of day again. In fact, the comment period for the new proposed pretty much replacements to XIV and to TVIX, I believe it's from Volatility Shares, one of those comment periods was out for over a year, which is an extremely long time for the SEC to keep comments open, which shows there was a hot and heavy, fast and furious flow of comments on that. And I'm guessing they were probably both sides. I haven't gone through them myself, but having talked to a lot of people on this issue over the past couple of years, I know the industry is of two minds on these products. Nonetheless, I know a lot of you out there in the retail trading world in particular love these products. And you're going to get another go at it. The SEC approving this week some rule changes that are going to pave the way for the return of effectively new flavors of XIV and TVIX. Gensler commenting, he even commented this week that these are contentious. He said they're studying the risks of allowing such complex products as well as potential rule changes to address those risks. And he even says, even though we're going to announce that they're consistent with the Exchange Act, that's kind of damning with faint praise, but they are going to allow them to go through. That doesn't mean the products are right for every investor. So he even stressed that out there, which is one of the things we talked about in the wake of the blow up of 2018. There were people reaching out to us here on the network who clearly had no idea what they were getting into, who clearly probably never should have been in a product like XIV. So they're somewhere the industry fell down, whether it was on the brokerage side, whether on the product side, whether it was somewhere in between. I don't know what it was, but people were getting into these products far too easily. They were seen as essentially synonymous with things like SPY and other indices that have long track records that don't have these exploding risks and swords of Damocles hanging over their heads the way products like XIV did. So it was definitely an issue. So, of course, that was in the discussion when they're talking about how to prevent that from happening again. So these new flavors of XIV and of TVIX are going to have a few tweaks to help prevent that. First off, remember, they were based on notes, and that was an issue for a lot of reasons. Effectively, you have all this unsecured debt floating around, and that's your only thing really backing this note. These are going to be ETFs, so they're going to have actual assets that they own. That's a little bit of a different structure. I know it sounds a little bit arcane minutia, but that is certainly a benefit. And they're also going to, remember, XIV really exploded towards the close back on February of 2018, listeners, and it just accelerated towards the close with all the rebalancing, and that was really what put the knife in its back. So they're going to, instead of going around with a 4 p.m. settlement around the VIX, they're going to use the old time-weighted average price to help set that closing price. So try to spread out that rebalancing window towards the end of the day to try. And again, they also mentioned they can extend that window if necessary. So they're trying to extend that rebalancing period, make it a little bit wider, make it a little bit easier, and minimize the market impact right at the end of the day. So, Mr. Meatball, we've been talking about the return of these products for quite a while. We know the folks over there at SEBO are probably happy because this is probably going to gin up some VIX futures volume. But A, what are your thoughts in general on the fact that these products getting the green light? And then B, do you think they've done enough in terms of tweaks to help prevent a return of Volmageddon, sir?
I mean, I think those tweaks are really important, but I don't know if that completely gets you in the clear from Volmageddon. I think the other thing is, with products like this, and what are your thoughts? I feel like you should need some sort of options clearance or, something along those lines, so that Johnny on the street can't just buy and sell. So, my thoughts are that they should put this in as some sort of, you need level 3 option clearance, or they need to have some sort of safeguard or safety check for users of this product. Because, I don't care what they do. If you just say, hey, you can buy it like an ETF, there's going to be, you're going to get some people getting burned.
I definitely think there need to be more safeguards in place. Level 3 clearance, I think that makes a lot of sense. I mean, you are getting inherent derivatives exposure, whether you understand it or not. So you should at the very least maybe understand what is going on. At the very least, maybe you have to click through a few other pages. Ever since Volmageddon, I have noticed when you're starting to trade some of these other levered and inverse products, I have noticed we have obviously accounts with a lot of different brokers out there to keep an eye on what's going on. The brokers on the platforms, and I have noticed a lot of them have started to add splash pages when you try to enter into options positions on various things, saying, hey, these products perform a little bit differently. Just click here if you're acknowledged that. I mean, most people are going to click through it. It's like a EULA. They don't even read it. But at least it's one step. I think maybe going a little bit beyond that, requiring some sort of clearance, whether it is level 3, maybe it's a separate type of clearance that they need to trade these things that's outside of the option spectrum. But I do agree. I do think there needs to be some additional step taken, because otherwise we're going to have a repeat in terms of not just the product blowing up. That's down to the mechanics of the product, but a repeat of people getting into these things that clearly have no idea what they're doing, thinking they can just buy and hold these things for the long term, and a whole bunch of other issues that have nothing to do with the mechanics of the products. They have to do with how the product is marketed and gated to the audience. I definitely think we need to do a better job gating. And that goes everywhere. That goes to the exchanges, that goes to the brokers, all the people who are kind of the intermediaries between the retail public and the product like this. Probably need to take a second look at how they gate these things, because that's going to go a long way. Got to get these guys on the show here so we can talk directly about the tweaks they're making and why they think these are going to be better and going to avoid a blow up. At the end of the day, though, Mr. Meatball, you are still shorting a thing that could effectively go to $1 million. The possibility is out there, so nothing is 100% secure. But it is still an intriguing one. I know a lot of you out there have been listening. Are you excited about this? Did you see this news? A bunch of you were hitting us up about it, so I'm guessing the answer is yes. But this is something we've been talking about for a while here on the show. It seemed like it kind of went away for a while. We hadn't really heard a lot of news about it. Then, of course, whenever there's a new administration in the SEC, it takes a while for them to get moving on things. And it seems like they had other priorities, like maybe meme stock madness and crypto. Maybe this got pushed down the curve a little bit. But nonetheless, they are in the process of being approved, and we should see some new products coming out of this one pretty soon. So if you're excited about this, got something more to be excited about. Well, let's get on out to the land of the futures, which is, of course, going to be a big deal when these products get listed again, to see exactly what impact there is on the volume. Speaking of the volume, we have the numbers coming in this week from our friends over there at OCC. Of course, they clear the VIX futures over there. And if you've been listening to the show since the pandemic started, you'll know there's been a few dark spots in the overall volume spectrum out there. I mean, options have blown the doors off. Most segments of the option space have blown the doors off. The couple of dark spots we really saw were index options and also VIX futures. VIX futures, for a variety of reasons, including the fact that XIV went the way of the dodo over 3 years ago, have all kind of accreted to the fact that, the futures haven't really done a lot of volume, not as much as you would expect, certainly, given everything else was blowing the doors off out there. In fact, many months, VIX futures volume, I should say, was actually down. This month, not so much. The numbers are in for September, and VIX futures finally a bright spot again on the horizon there. Total futures volume cleared over there at OCC, 5.4 million contracts. That's a 29.3% increase from September of last year. Mr. Meatball, those numbers come as a surprise to you? And as an addendum, sir, how much of a boost do you think we're going to get now that we finally have the new XIV in the offing, sir?
Yeah, I'm surprised that we got that pop. I wonder what the driver was, other than, we were breaking some trends. So that could have absolutely caused something. But again, futures hedging just has not worked very well. And that is part of the reason why you're not seeing the activity. And you're darn right that VIX futures volume is going to blow higher if these things start to get some wings. I can tell you the SEBO has to be happy about this. It is going to bring some volume back.
Well, we have our duly appointed SEBO rep in the chat right now, Mr. Flowmaster, and he just typed, "Oh, yes, we are." So, yes, he is excited. It sounds like the folks at SEBO are excited about this behind the scenes. Let's get into some of those futures numbers right now. Coming into showtime, we had a little bit of evolution. Obviously, the front portion of that futures curve coming back down a wee bit from last week. The OP future moving not quite 3 points, about 2.5 points when we kicked off the show. And the no future was down a little over a point, about 1 1/3 points from this time last week. Mr. Meatball, we saw that front portion of the curve last week get kind of juicy and kind of giving up some of that juice this week. Anything catching your eye out there from a VIX futures perspective this week, sir?
Well, like I said at the top of the show, I'm impressed that the VIX futures laying on top of the VIX itself so closely. It still has 8 days to go, and it is a lot closer to the cash index than it has been over the last 6 months. Some of that premium juice seems to have been kind of flushed out of those futures, and so I'm really like I said, I'm really interested in whether they will, take some of the. Whether next week is going to follow the pattern or whether we're head for a break. And another thing, Mark, I just realized if these are going to be ETFs, does that mean there's going to be options on them as well that maybe trade that would be full of funness?
Yes, I wondered the same thing myself. I have to imagine there probably would be, and I agree, they will be full of lots of funness out there. So we may have some new options to parse here on the show, which is always fun. And we're getting into the futures. Before we get it a little bit farther, last week we had a good discussion on the show Mr. Meatball with Mr. Jem over there from Kai Volatility Advisors. We talk about the volatility futures, and I've often joked many times here on this show about how the answers to all of your volatility questions lurk somewhere there on that volatility term structure. And he posited an alternative to that, which is something we talk about on the show many times, but we don't get into a lot, which was he thought SKEW was perhaps even better as an indicator and in terms of answering the question of what the market is up to, what the market is intending out there. And so we've talked many times, we take a dim view of the SIBO SKEW index for reasons we have listed many, many times out there in the past. It's got multiple moving parts. It's kind of an obtuse nomenclature. It doesn't really tell you what is causing the change in the number. It's only updated once a day. I can go on, but I won't. Instead, interesting stuff coming out. I believe this was the Journal in their Daily Shot newsletter. They were talking about this, and they were watching the SKEW index as well. And normally when I see a broad financial publication talk about SKEW index, I don't really pay attention because it's an obtuse thing to begin with, let alone how it's filtered through the lens of the mainstream financial world. But they were quoting some data coming out of Susquehanna. They should have a better understanding of what the SKEW actually means out there. And the Susquehanna folks, first off, they were talking about the decline in the SKEW index, and they are right. The number has come in quite a bit. We were talking recently on the show that it was hanging out at or around all-time highs, somewhere in the 150 plus range, which is pretty elevated if you know much about the SKEW index. It has since come off those levels quite a bit. Coming into showtime today, it was at about a 133. And the folks in Susquehanna crunched the numbers, and they looked at the average SPY returns after the SKEW index fell more than 10% in a month, which is pretty much exactly what we have out there right now. And kind of interesting stuff. And after it's fallen that much, the 1 month return is actually, it's like around 2%, 2.01%. Perhaps an intriguing indicator. And getting back to what we were talking about last week, Mr. Meatball, about the value of SKEW as an indicator. So first off, I know you're like me, you take a dim view of the SKEW index, but it has come in quite a bit. What are your thoughts on that? And B, are you buying what the Journal and Susquehanna are selling, that a decrease in SKEW means we are off to the races in SPYs?
Falling SKEW is typically going to coincide with a sell-off. We're in one. And the reason why SKEW falls is because traders are selling back their long hedges. So what you're seeing is lots of put selling as VIX is in the 20s and specifically out of the money. And then what that allows the market to do is to rally. Yeah, it makes total sense. And yeah, SIBO SKEW index, if they could get that thing running constantly, which they could, I think it would be a valuable index. But they don't, and it makes it kind of hard to use. The nation shares SDEX isn't terrible. And then the one I actually use to track SKEW is I actually run VXN versus VOLQ and see how that at the money vol is trading relative to kind of the totality of the curve. And I'm able to garner a decent amount of information from that one as well.
Speak of the devil, sir. Scott Nation's tweeting out right before showtime about something similar, talking about S&P vol versus NASDAQ vol. I was going to save it for later, but you just invoked it. Coming into showtime, vol Q was down only 1.4%. Vol Q, obviously, the NASDAQ vol, the straight at the money vol of the NASDAQ. No SKEW involved there. And then you have vol E, which is another one of their measures out there. That's down 5.4%. So S&P at the money vol versus NASDAQ vol. Mr. Meatball, it sounds like you're watching more of that trade between S&P vol and NASDAQ vol these days as well. Not just Scott. Obviously, Scott's got a dog in that race, but you're intrigued by that as well.
Absolutely. There's the S&P and the NASDAQ correlate more than they ever have. They're more related than they've ever been. They carry so many of the same assets. And so when those SKEWs, when that volatility does separate and change, it needs to be noted, and it can create some interesting trades, between DJX and SPX and NDX. You can find some interesting trades.
Interesting trades indeed. If you want a way to find those interesting trades for yourselves, listeners, you're a little bit confused. Maybe you're not a huge fan of the SKEW index. You want something that's a little bit more intraday, shall we say. And if you're listening to our shows like TWIFO that we do here on the network, you can head on over to those reports, cmegroup.com /TWIFO or /TWIO and run the reports for the E-mini S&P 500. And guess what you're going to get in there? You're going to get quick skew, which is going to show you independently the movements of the call wing in the S&P 500 and the put wing in the S&P 500, and also show you how they've changed over the course of the past week. I find that to be far more useful of a measure than just one obtuse number that aggregates them both together. And you can run that for yourselves. It's completely free. And you can see for yourself, if you went in there right now, those puts are going to be somewhere around 30% premium. A little bit less now, because obviously it's come in a little bit. Let's say 25% premium to where the at-the-money vol is trading out there. So keep that in mind if you're thinking about hedging to high heaven. It's still challenging to make that trade pay off in the long term, but intriguing stuff. So if you want easy access to an updated intraday SKEW indicator, that's a great place to go. Let's keep on going now into VIX options land. Coming into this segment of the show, about halfway through the show here, we're seeing VIX doing some numbers, closing in on 400,000 contracts, about 387,000 contracts on the tape right now. The ADV 474, that's up about 6,000, so threatening 500,000. Not that long ago, it was back below 400K, so that ADV has ticked up pretty aggressively over the course of the past month. Let's go out, see what the size positions are out there in VIX options right now. Let's do a quick top 10. By the way, only 2 calls in the top 10 this week, listeners. So read into that what you will. Rest of it is all puts all the time. Cost you 131,000 contracts to break into the top 10. That gets you to the NOV 18 puts, number 9. 133,000 of the October. August would be interesting. Of the October 19 puts. Number 8, 134,000 of the October 20 puts. Number 7, our first of 2 calls on the list. My friends, the NOV 60s, 148,000 of those bad boys open. Number 6, 166,000 of the OC 16 puts. Number 5, our final call in the top 10 here, 168,000 of the October 50s. And that's it for calls. The rest is all puts, listeners. Number 4, $1.82 of the OC 18 puts. Number 3, 192,000 of the NOV 17 puts. Number 2, 232,000 of the OC 14 puts. And rounding out our top 10 this week, 278,000 of the October 17 puts. Let's run down really quickly this week's activity. Actually, a decent week, all things considered. Certainly compared to last week where we saw some pretty anemic days. Like we said, today so far, nearly 400,000 contracts on the tape. The most active contract today looks like it's the OC 17 puts. Our old friend, the number 1 out there this week, doing over 100,000 contracts already today, 108,000. That explains why today is such an active day. Over 100,000 contracts going up already in the OC 17 puts. You know, some adjacent puts have to be trading then. And number 2, a distant number 2, 44,000 of the October 18 puts. Number 3, 26,000 of the OC 19 puts. And number 4, the NOV 17 puts, 21,000 of those bad boys. Rounding out the top 5 today, we've got nearly 20,000, about 19,000 of the October 20 calls. So there is 1 call to be found, but not much. Yesterday, a little bit more paper, though if we continue on today's pace, then we're probably going to exceed yesterday. Yesterday, 402,000 contracts on the tape. The most actives out there yesterday, OC 20 puts, 27,000 of those. Number 2, about 25,000 of the OC 19 puts. Number 3, 23K of the October 18 puts. Number 4, 20,000 almost exactly of the DEES. First DEES on our list here, 19 puts. And rounding out the top 5 yesterday, OC 50s, our old friends there. 15, almost 16,000 of those. Wednesday, a little bit more paper, 461. So many days at or threatening the ADV this week. 461 on the tape Wednesday. The most active contract out to DEES on Wednesday, 67,000 of the DEES 17 puts. Number 2, 55,000 of the DEES 50s. So a lot of DEES on the tape on Wednesday. Number 3, 50,000 of the OC 50s. Number 4, 23,000 of the October 30s. And rounding out the top 5 on Wednesday, you got to have some weirdos thrown in there. You got the NOV 70s, because why not? 15,000 of those bad boys going up on Wednesday as well. Tuesday, a tick under 400K. 399 on the tape, the most active contract. The NOV 15 puts 37,000 of those bad boys, followed by number 2, the D17 puts about 21,000. Number 3, October 16 puts 20,000 of those. Number 4, 18,000 of the OC 20 puts. And rounding out the top 5 on Tuesday, we have the October 18 puts. Monday was kind of the laggard of the week. We already have surpassed it today, so it is going to be the lightest day of the week. 381,000 contracts on the tape on Monday. The most active contract was pretty light, 26,000 of the NOV 17 puts. Number 2, back out to the interesting strikes. The NOV 75s, 20,000 of those bad boys going up on Monday. Number 3, 19,000 of the OC 40s. Number 4, 17,000 of the OC 75s. I think you can tell from these strikes what was going on in the VIX itself on Monday. And number 5, 17,000 of the OC 19 puts. Mr. Meatball, we had a steady week, I think you can call it, from an overall VIX options volume. Had some interesting strikes lighting it up, 70s, 75s, kind of across the board. Which trades came across your radar out there in VIX options land this week, sir?
Yeah, I've been fascinated by the amount of volume taking place in October downside. You mentioned 108,000 of the 17s have traded today, 44,000 of the 18s, 26,000 of the 19s. They are not messing around on some of this downside today. November just as busy. Well, not just as busy, but busy. Those same 17 puts, 21,000 of them trading, the 19 puts, some of that trading. We're seeing a lot of positioning for a real drop in volatility. And, we've seen this in the past. We've seen these downside open interest puts blow up only to kind of fail, if you will. And again, those 17s, they've traded 108,000 of these today. And the open interest on that is the biggest of any strike in all of VIX. And I don't think they're short. They're paying 15 cents. They're paying 20 cents. I think they're buying them. And I would expect, I think that you're going to see that volume increase to, potentially that open interest potentially increase over 300,000 on Monday. I think you're going to see people were net buyers.
Yeah, some folks swinging for the downside fence is maybe more of a base hit swing at that point, but still intriguing stuff. You're right. They're not giving those puts away. They are still paying some money for them. So intriguing stuff. We shall see if that comes to pass as we keep on rolling. Speaking of downside, we got to talk your favorite products to fade the downside. Of course, maybe we'll have some fun talking about the new flavors of XIV and TVIX when and if those get listed again, and we have some options hopefully on those. That'll be a fun duo to add back into the mix, and we won't talk as much smack hopefully about the new flavor of TVIX as we did the old one. But we'll save that for when those products are here. Let's get on out to VXX. Coming into showtime, it was at about exactly a 25. That puts it down about 2.25 points from where we were this time last week. It looks like it's still pretty much close to that level right now. As we said, things are firming up a little bit as we're seeing maybe a little bit of a sell-off out there. In terms of the paper on the tape out there, a decently active day in VXX. We're seeing, actually looks like it just ticked up about exactly 200,000 contracts on the tape right now. So a pretty strong day. The ADV is also ticked up since this time last week, up to about 304. It's up about 17,000 from this time last week. Let's do a quick top 10 out here in VXX land. Cost you 14,000 contracts to break into the top 10. By the way, looks like we have one. We have actually two. There are still two pre-split adjusted names in the top 10, but everything else is good old normal VXX. Let's go number 10. By the way, there are only 4 calls in the top 10 in VXX right now, which is more than I expected, quite frankly. And number 10 is our first call, 14,000 of the DS30s. Number 9, also 14,000 of the OC24 puts. Number 8, 15,000 of our pre-split adjusted friends, the Jan 3 puts, Jan 2023. 3 puts. So those are going to be around for a while. Number 7, 15,000 of the NOV 18 puts. Number 6, 15,000 as well of the OC expiring today, October 8th, 26 puts. Number 5, we have a nice little call strip here. Number 5, 16,000 of the October 28s. Number 4, 16,000 as well of the October 55s, the doubles expiring today. So interesting. Probably not going to hit that strike by today, but stranger things have happened. Not many, but stranger things have happened. Number 3, 17, almost 18,000 of the OC 40s. Number 2, 18,000 of the back to the Jan, the fun Jan puts. Jan 2022, 12 puts, the pre-split adjusted kind. And number 1 out there, 27,000 of the OC 25 puts. Let's see what's lighting it up out there today. Actually have some decent paper out there today. The most active contract today, about 18,000 of the OC 25 puts going out today. And again, we're pretty much right at that strike right now. So that one's coming down to the wire. Same deal for the AUK 25 calls. Those have about 12,000. Those are going out today as well. So going to be bouncing around on those for a little bit. So you're gonna earn your money if you're hanging out short on those. Hopefully you've closed them already. Number 3, the AUK. Let's see, these are expiring next week. The 15th 30 calls, about 7,000 of those, 6,000 of the October 15th 27 calls, and about 5,000 of the October 15th 24 puts. Mr. Meatball, anything lighting up your tape out there in VXX this week, sir?
Yeah, I mean, it's just been kind of down all week. And continues to get soft. It looks like it's heading for, wants to threaten you know what? It is threatening a new all-time low. It's not there yet. But don't be surprised if we get there sometime today or Monday if we're green on Monday.
Yeah, they are coming for some of this juice. Same thing in UVXY, shy of the 21 handle. Coming into showtime, it was 20 3/4. That puts it down exactly 3 points from where it was this time last week. So if you kind of held on to these, last couple of weeks have been kind of a whole bunch of nothing if you were hanging on to the downside there, because we went up and came right back down to pretty much where we were. So intriguing stuff out there over the last couple of weeks in VXX and UVXY. UVXY doing some paper today, closing in on 200,000 contracts. That's up about 15,000 from an ADV perspective. Not quite there right now, only about 100,000 contracts on the tape. Let's just do a top 5 because these positions are much smaller here in UVXY, even though they are starting to grow. Number 5, 8,000 of the October expiring today, 20 puts. By the way, it's exactly 50-50 calls to puts in the top 10 of UVXY. I bet you didn't expect that, did you? Number 4, we have 8,600 of the October 25 calls going out today. Number 3, 8,800 of the pre-split adjusted Jan 1 puts, 1.0 puts. Number 2, 12,000 of the October 21 puts going out today. Interesting stuff there. And number 1 out there with the bullet, 16,000 of the Jan 75 calls. Again, our friend out there who loved the SEPs now has clearly rolled out into Ds, because there's D70s open, and then now Jan, number 1, Jan 75 calls. Someone is enjoying the old upside premium harvesting in UVXY, and they're getting surprising amounts of juice to do just that. So I used to mock this fellow, but now I think maybe he's onto something because he has discovered something intriguing. And I shouldn't be talking about it here on the show because someone else is, obviously other folks are starting to flock into this trade now, but it's an intriguing one nonetheless out here in UVXY land. Today, what's lighting it up? 12,000 of the 21 calls going out today. And like I said, 25 is a strike we're flirting with. In VXX, we're flirting with the 21 strike right now in UVXY. 21 puts also active going out today, about 7,000 of those. 20 half puts also going out today, about 6,000 of those. Then number 4, about 5,000 of the 20 puts going out today. And rounding out the top 5 in UVXY, about 4,700 of the 21 calls going out next week. Let's go really quickly. Speaking of next week, let's look really quickly on the earnings vol front. If you've been listening to any of our shows, like we had the advisors option recently, Matt was breaking down the numbers for this past cycle and, of course, what's coming up over there for next cycle. And he's been crunching these numbers for a while. We've been tracking these numbers for a while, and he's expecting a little bit more juice on the screen coming up next season, which would be nice because if you've been listening to and reading all of our free earnings reports over there on the site for a while from our friends over there in Oras Land, you will know that vol has been coming in pretty much since the start of the pandemic. We've yet to have a season that's even broken even, let alone made money out there. But this past season was actually one of the more robust we've seen. 86% is where we came down on that season. And we are on the cusp of a new cycle, perhaps delivering a little bit more vol. We still had some names popping off this week. We had PepsiCo on Tuesday, Levi's, and Constellation Brands. They own Corona and Modelo and a bunch of other beers and things you've heard of out there. They own Svedka vodka. Thursday, Conagra Brands, so a lot of brands reporting this week. They own Heinz and Orville Redenbacher popcorn, all that fun stuff. And Slim Jims. Everybody loves a Slim Jim yesterday. So we have some move reports for those. Levi's was on the 6th after the bell. And you'd think, how much juice is there in jeans, really? But you'd be surprised. They went into their announcement 24 1/4, and they were pricing in about 7%, which is already decently juicy. And they delivered nearly 11%. So outperformance on the jeans front, which is intriguing out there. Now, it wasn't all sunshine and rainbows. We also had Tilray yesterday before the bell. They went into their announcement 1080. They were pricing in 11%. So they were pricing some juice in until Ray, hey, it's the cannabis sector. You can't fault them for pricing in a little bit of juice. They delivered exactly the opposite, 1.4%. So that's more along the lines of what we've come to expect in the earnings volatility environment, which is a whole lot of nothing, squeezing all that blood from the stone out there. But still, it is intriguing stuff. Looking ahead, we are seeing some names pricing in a little bit of juice. We got the new reports for next week. Let's go out first to the airlines. Delta Airlines, they're on the 13th next week. They're at $44 exactly as of the time of this report. They were pricing in $1.50. In the past, they moved about $1. So a little bit extra juice out there in Delta Airlines. Given what's going on out there, maybe hard to fault that one. JP Morgan at about $1.69 coming into this report. They were pricing in $4.25. In the past, they moved $3. So again, 2 for 2, more juice coming in there. Bank of America, let's see if they're keeping it up. They're on the 14th before the bell next week. 44.25 is where they were trading. They were pricing in $1.25. In the past, they've moved $1.25. So no joy there. We've got Citi, 72.5. They were pricing in $1.85. In the past, they've moved about $1.85. So similar story there. Not a lot of wiggle room there. Then we have good old, this was an interesting one. That's right. Domino's Pizza. Pizza Vol. How much Pizza Vol is out there? Well, there was a lot. And we all know Domino's has been one of the big winners of the pandemic period here. They couldn't make pizzas fast enough. Coming into this report, they were $482.66. So pretty lofty for Domino's Pizza. And they were pricing in $23.32. That may sound like a lot until you hear what they used to price in and what they've moved in the past, actually. They've moved $38.02 on average in the past. So they've cut that vol almost in half. So that's a lot of juice coming out of the pizza land. So someone is expecting a vol apocalypse in Domino's Pizza. Is that the right play? We shall find out. And we're also going to find out what you folks have on the brain. It is time for your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, let's get to it, listeners. Some of your questions. We also turn the spotlight back on you, ask you guys questions sometimes, just like this week. This one was actually inspired by our most recent episode of Options Bootcamp. We had a listener question about what do you think is the most misunderstood option strategy. We had a fun debate on that show, and we thought, you know what, this would be a good one to put out to you folks. So we did just that. We asked you, which strategy do you think is the most quote-unquote misunderstood? Gave you 3 choices: straddles or strangles, time spreads, or butterflies. This question was initially conceived around butterflies, so we were getting a lot of butterfly questions, but once we added time spreads in there, they added a new wrinkle. And then, of course, you guys have been asking a lot about straddles and strangles of late. Then we gave you the other, because this is one that's hard to lock you down to just 4. And you guys have been hitting us up with all sorts of suggestions. Short puts, a lot of you verticals, and then also a lot of you talk about box spreads, interestingly enough, which, again, we wouldn't have thought to put on our list. That's why we put the other there. But Mr. Meatball, I'm curious for you. If you have an answer here, which of these 3 you think is the most confusing? Straddles, time spreads, or flies? Have at it. And then more importantly, what do you think our audience is voting for, sir?
Well, I think there's a difference between most dangerous and most confusing. And straddles and strangles certainly have the most risk associated with them. But time spreads, because they're 3-dimensional, multidimensional, I think they can be extremely confusing and lead traders to do things they don't fully understand. So my vote would be with the calendar or the time spread. I think that is by far the most difficult to understand for your average retail trader.
And you think our audience is going that way too?
Probably.
You would be correct, sir. Yes, 45.1% going for time spread. I'm definitely on that one. Just that's a 201, perhaps even a 301 options concept. I know a lot of professionals who have a hard time wrapping their heads around time spreads. You have 2 contrasting positions on at the same time. It's a lot for people to wrap their heads around. So, I initially conceived this around butterflies, because we were getting so many questions about butterflies. But once I thought of time spreads, adding them to the list, that was it for me. That has to be the answer. But right now, it's still a close fight. 45% for time spreads, 31% for flies, 17.6% for straddles and strangles, and about 6% for other. If you don't agree, you want to get in there, change those numbers. You got about 2 hours left on this one, listener. So you folks after the fact probably won't be able to play because this comes out after oddities. So get in there now at options, make your voice heard over there. Speaking of your voices, a lot of folks echoed what this guy had to say here, Mr. Meatball. This one comes from J4340. He says, hey guys, just wanted to say I really enjoyed when you had Jem on vol views last week. He was very interesting to listen to describe this odd vol market. Please have him back. Thanks. Great stuff as always. A lot of people echoed that sentiment. They enjoyed him parsing, in particular, the SKEW and getting into some of those second order Greeks. What do you think, Mr. Meatball? I think we should have him back someday.
Yeah, he was great. I really enjoyed kind of the deep dive. I think it's important for us to do retail and talk about things on the level that you and I normally do. But it's always worth it every now and again to bring somebody who's really actively trading vol in a much bigger way and trading it in maybe a different from a different angle and talk to them about what they're seeing and what they're doing. Because I thought he brought a lot to the table, and the more often I would have him on once a month. He's great. I really do like him, and I thought he was brought a lot. So yes, bring him.
It was interesting. The audience liked it. And talking about charm and Vanna always gets you a return trip to the hot seat there. Let's go out to, let's go to this one from Mant USA, or maybe Mantusa. Mantusa says, hello, Volatility Views. I saw this article on the volatility surface and thought of you. It mostly lines up things that you guys have already said, but a few interesting tidbits. Enjoy, and thanks for all the vol wisdom. Well, you're welcome there. I'm going to go Mant USA. It just sounds better. He sent us an article, I believe this is from Wilmot, about strange news from the volatility surface. Looks like it's mostly an interview with Timothy Klassen. He's the CEO of Vola Dynamics. And he talks about here what he terms the influx of retail renegades. He says this led to, quote, more extreme wings and vol surfaces of many underliers, both in terms of the wider range of strikes that was traded, but also in terms of the volatilities and the wings themselves. With these changes and conditions, it has shifted certain aspects of the market, demanding, quote, fancier vol curves to fit the implied volatilities of many underliers. He says many vol curves used by market participants were not able to fit XPX vol curves back in March. I do believe he's talking about last year, March. The shapes were completely unprecedented, at the money curvature being negative for all maturities and extremely steep near call wings. We heard stories of banks not having an SPX vol surface for a full day or two in March because of this. So he's talking about a couple of the things here. He's talking about, obviously, things we've talked about many times on the show. We call it meme stock madness. He calls it retail renegades. It all applies to pretty much the same thing, this massive influx of smaller one-lot type traders, usually lifting offers in the call wings of a lot of these cheap meme names. And that, you're right, that we have talked about it many times, how you can't really fit that into a normal curve. In fact, we've talked about how people have been arguing maybe we should reprice the entire way that we price upside calls in some of these meme names as a result. So yes, we have talked about that. And we haven't mentioned folks not being able to fit vol curves for the big sell-off in March during the pandemic, but it makes a hell of a lot of sense. That was pretty much unprecedented waters for a lot of firms. Mr. Meatball, he's right. This is mostly stuff we talked about here on the show, but any takeaways from this, sir, that resonated with you?
No, I have not read it, but it definitely sounds interesting. I mean, retail traders have definitely changed the dynamic of the entire marketplace. Just the way you expect, and I know we keep hitting on SKEW, the way you expect SKEW to look on an equity has changed permanently because that upside is not at a discount anymore. For those that are newer to the business, retail traders have turned the call spread into such a great trade in some of these meme names that it's hard to ignore.
You're right. I got myself the other day on our TWIFO program talking about the differences in SKEW between your traditional equity options and, let's say, a commodity like a gold, where oftentimes the bid is to the upside. And then I caught myself. I said, wait, you can't say that anymore because the meme stocks have changed all this. So you're right. It has changed the dynamics. I do like that term, retail renegades. I may have to, quote unquote, borrow that from who was this guy's name? Timothy Klassen here. So if I borrow that, Timothy, I hope your licensing rates are reasonable. Let's wrap up with this one. It's a fun one here from Mackenzie. She wants to know, is it pretty much safe to say you should play UVXY on the vol downside, easy for me to say, and VIX on the vol upside? Or is that too simplistic? So she's pretty much saying, Mr. Meatball, UVXY for the fade and VIX for the pop. Are you down for that?
That's the way I play it. And to her point, I came in short umpteen thousand shares of UVXY this week. And I said, I don't need this vol exposure. I've got something else. So I bought the 21 calls against them expiring today, assuming, these will end up in the money and the position will disappear. Well, that's not exactly the way things have happened. So now I need to go and sell some puts to unwind this position. So it's pretty fascinating the way UVXY can drop. And yeah, I like VIX as an upside hedge much better than I like UVXY and VXX. It just the way that strike sticks tends to work a lot better than the decay that you see in VXX.
What's wrong? You don't want to go into the weekend, tons of short deltas in UVXY?
No,
I can't imagine why you not want to do such a thing, sir.
I don't, believe it or not.
What we do want, though, maybe with a little bit of trepidation we want it, is to roll on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, that most difficult, that most dangerous part of the show where we attempt to figure out what the heck the vol gods hold in store for us for the coming week. And let's see where we were this time last week. Mr. Meatball, you were quote-unquote fading your book. You were at 24 1/4. Not quite there right now. A good 5 handles away on spikes and even more on the VIX land out here. I was feeling an 18.5. That's actually looking closer. I'm about half a point away. Actually, no, I'm about 3/4 of a point away on spikes and about half a point away on VIX. So a little bit better. Actually, about 0.4 of a point away on VIX. So a little better, not within our 1/10 of a point margin of victory, but it is close. And then we have Mr. Gem from last week. He was at 17.5. He was feeling a lot of vol going the way of the dodo. Didn't quite get there. So he's about a 1.4 or so handles away on VIX and about 1 3/4 points away on spikes. So not quite there on those. So technically I'm the closest, but I don't count that as a victory. We had a bunch of people all over the place this week. Well, let's see here. No, limited was 17.76. So no joy there. Options queen, she was at 18. So that's closer. You're about you're about almost a point away on VIX. So not bad. Super VIX, I like that handle. Super VIX, 19.15. Ooh, Super VIX is looking super good. He's actually within a 1/10 on spikes. So you know what, Super VIX, winner chicken dinner for you. Well done. Hit us up. Maybe a prize is in the offing for you. JVC, 16.45. Not going to get there, sorry. Munster, 16.70. Nichols was at a 17.02. We had a bunch of other ones. Let's see here. Looks like those are some of the Super VIX is definitely the closest, 19. So well done, Super VIX. Love seeing new names in there. I love seeing you folks winning. Well done. Within a 1/10 of a point. That's a tough thing to do these days. So Super VIX, hit up our producers. They will find you some suitable prizes out here. But now it is time to go out for this week and see what we got on the horizon. I was first. I was closest, but I didn't really win. So Mr. Meatball, I'll let you pick this week. You want to go first or you want to go last?
I don't know. Mark, you're pretty darn close to a bullseye. 1869. I mean, I would call that.
No, I was 18. I was 18.5. I was 18.5.
18.5. 18, and we're 1868. That's pretty darn close. I'm going to say that's not quite a bullseye, but that's the second ring around the bullseye.
All right, so I will take your praise.
25 points, but not 50.
I will take your praise then. A modest bullseye.
But I'll go first, and again, I'm going to fade my book, and I'm going to go 2020.
An excellent program, excellent vision. And is it an excellent vol prediction? We shall see. Is that show even on the air anymore? I have no idea. Shows how much I watch TV news shows these days. All right, 2020. And I guess you're right. I was within that second ring around the. I was trying to be hard on myself, but C'est la vie. I'll take a close adjacent winner when possible. So we're at about 19.25 in spikes and less than that, far less in VIX. This is another one of those ones, though. We're seeing a lot of fading paper, seeing a lot of those puts coming in. If those come to pass, that could be intriguing out there. Will we flirt with that? I think so. Will we stay there by this time next week? That is the perennial question. I'm going to say this time next week, I'm going to say that we are lower. I'm going to say we are 1767 for this time next week. So you got quite a wide market to drive between, listeners. You're talking not quite 3 points, but pretty darn close to it out there. So get your questions, or I guess you get your guesses in. Maybe you'll be like Super VIX, knock it out of the park out there. In which case, you can be a winner chicken dinner as well. Remember, you have 2 chances to win too. You have spikes and VIX, so you get 2 tilts at the old windmill. Unfortunately, we're out of tilts this week. That music means we're done, but don't worry. If you're in the secret club, you can come back in about exactly an hour. We're going to break down the weird, wild, and woolly week of unusual options activity coming up on Options Oddities. That's, of course, for all you folks in the secret club. You want to learn more about how to get access to that secret club, of course, learn about the pro Q&As, get access to all the Q&As we've already done, all the Options Oddities we've already done, and more importantly, all the ones we have coming up. TheOptionsInsider.com/pro is the place to go. And Mr. Meatball, where should they go if they want to hit you up about trading VIX or maybe some of these new products that are approved or VIX futures or anything else in the world of volatility, sir?
Yeah, you head to optionpit.com and make sure you're reading my posts and blogs every day. They're worth your time and effort. Optionpit.com. Read the VIX Edge, read the Pit Report, read Profits and Pumps. That one not written by me. Read all of them. You're going to be a happy camper if you do. It'll make you a better trader. Optionpit.com.
There you go. And you know where to go for all of your spikes needs. MyAxOptions.com/spikes. That's the place to go for recent data, historical data, press releases, even a link to a cool show called Volatility Views. What more could you ask for from a vol-oriented destination? MyAxOptions.com/spikes. Looks like we got the guesses already coming in fast and furious. We got a 1914. We got an even 20. We got an 1875. Folks are kind of all over the place, which is kind of fun. It's one of those weeks where we could touch all of those easily. So hit us up. Get your guesses in. Maybe you will win fabulous prizes. We'll be back again in a little bit less than an hour now for Options Oddities. And then back again next Monday. Kick it all off with the option block all the way through to Friday. Another episode of Volatility Views. We'll see you then.
Volatility Views is brought to you by MyAx, one of the fastest, most efficient trading platforms in the world. MyAx is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.